But on to another heavyweight sector then. Now, muted revenues and weak guidance defined Q4 for the IT pack. Top-line pressure and margin contraction were evident, but firms are shifting gears by doubling down on AI, automation and strategic partnerships to offset sluggish discretionary spending. Ansh is here with all that roundup.
Firstly, ICICI Securities has collated this data on IT, and as per them, Q4 was a mixed bag for IT sector with muted growth, weak guidance and margin pressure. But let's talk about it in detail. Now, starting with revenue first, top 5 IT firms saw an average dollar revenue decline of around 1.8% sequentially, whereas Tier 2 names like Coforge, Emphasis and Persistent actually showed stronger momentum as compared to Tier 1 stocks. Discretionary spending stayed weak, especially across retail, automotive and manufacturing sector. Now, if we talk about guidance, then we are seeing that in report they have mentioned that Infosys gave one of the weakest ever guidance, just 0 to 3% CC growth, whereas Wipro has given a Q1 guidance which is negative. And apart from this, if we talk about other stocks, then we are seeing that KPIT signed and Coforge has actually suspended their FY26 outlook. So overall growth visibility remain uncertain in here. If we talk about margins, then we are seeing that margin for top 5 players has declined by around 44 basis points sequentially on an average basis. Whereas if we talk about AI trend, then AI is now part of most of the client deals, offering around 20-40% of cost saving, and firms are actually tying up with OpenAI, Nvidia, Google and others to deepen their capability. So lastly, if we talk about overall thing, then the bottom line here is that while Tier 2 IT firms and AI adoption provides some hope, the sector continues to face headwinds here. Weak guidance and delayed hike highlight the cautious mood as FY26 begins here.
Thanks, Ansh. With this, let's shift focus on the auto sector. No major bumps on the road for the auto sector in Q4. Volumes remain largely stable and commentary suggests cautious optimism for FY26. Even margin pressures persisted, but softening commodity prices provided some cushion. Sharad is joining us with the roundup of Q4 for auto sector.
Well, it's been a smooth ride when it comes to the autos in the fourth quarter. Overall, the performance, if you look at it, no major disappointments coming in from the larger names. And interestingly, the supportive commodity prices are there. Now, that also helps in actually capping the price hikes also, which we had seen last year. Interestingly, let's look at how the two-wheelers have performed. And we'll go company by company. First is TVS Motors. Outperformance coming in, bullish commentary. Hero Motor, there's a 14 to 16% margin guidance. TVS Motors, it's good export growth. Eicher Motors also, they're expecting a better growth coming in. One important point I would like to add is that IMD has also stated that the monsoon will be coming in a bit earlier. So that's a positive point as well. Passenger vehicles, M&M, solid numbers, margin beat the estimates. And Maruti Suzuki, however, on the losing side, margin has been a miss. But the export outlook, that has been very strong. And we have seen the export numbers actually doing really well when it comes to the other names as well, especially the two-wheeler names, which I'd like to point out. Also, interestingly, let's look at how the farm equipment and the tractor space has actually worked out. M&M is there, and of course, Escorts is there. Over here, tractor, there's a positive view coming in. They're having a high single-digit growth expectation. They're expecting between 7 to 9%, while for Escorts also, margins can improve from the current levels as well. Now, interestingly, let's look at how the tires have actually panned out, and also these numbers have come on the muted front. Apollo Tires, underperformance has happened. But see it, they have shown a good growth as well. Now, of course, there are crude derivative related projects, and the fall in crude prices might also benefit these companies going ahead as well, where there comes a lag of almost 1 to 2 quarters. But all in all, auto has delivered an inline set of numbers when it comes for the March quarter.
Okay, thank you, Sharad, for that roundup of the auto sector as far as Q4 is concerned. However, a slew of headwinds denting the FMCG show in the March quarter. Commodity costs and softer urban demand stripping the fast-moving tag to a test. Now, let's go across to Snehi, who's standing by to take us through the fine print for the overall sector.
Well, yes, if you take a look at the earnings fine print for the entire FMCG space, it's been a good set of numbers coming in, not much to complain about. Every company has seen revenue growth. On the flip side, every company has seen margin contraction. Let's take it company by company and take a look at what's happened. It's a surprising beat coming in for Britannia, wherein revenue has gone up, volume growth has been around 3%, and there's been contraction in margins. Tata Consumer, Nestle, HUL, Marico, all of these four were in line with street estimates. For Tata Consumer, revenue growth has gone up by 17.3%, the underlying volume growth at roughly 6%, and contraction in the margins. Nestle also revenue growth up 4.5%. Overall margins they don't report, but Maggi has gone back to volume growth is what the company has said. Margins have very nominally contracted for Nestle this time around. HUL also inline set of numbers, revenue growth of 2.4%, volume growth of 2% coming in, beat versus expectations on that front. Margin contraction also very nominal for HUL as well. Marico inline set of numbers, very strong revenue growth coming in, outpacing the revenue growth of all its peers. A 19.8% revenue growth is what we've seen for Marico. India biz volume was also up 6%, so in fact good set of numbers coming in for Marico, but largely penciled in, so in line with the street estimates. There's been a big margin contraction on the flip side for Marico at 16.8% compared to 19.4% on a year-on-year basis. On the flip side, mixed set of numbers coming in from Godrej Consumer, revenue was up 6.3%, volume growth of 6%, margins have also nominally contracted. What has not done well this quarter, along with the quarters gone by, is Dabur, because mixed to largely weak set of numbers coming in for Dabur. Revenue was up only 0.6%. This time around, they have not reported their volumes at all, which is why we're estimating that it's a negative volume movement coming in. Margins have also contracted to 15.1% compared to 16.6%. Overall, if you have to sum up the FMCG category's performance in Q4, like I said, most all companies were either in line or a beat versus estimates. There have been no misses other than Dabur, which was also a miss only on some fronts. So overall, good set of numbers. Revenue gone up year on year for everyone. Margins have contracted year on year for everyone. Volume growth has been seen this quarter, but that's largely on the back of pricing action that was undertaken by the companies, and volumes have recovered well nonetheless as well. So well, that's the sum up on FMCG in Q4. Largely good set of numbers coming in, and no complaints for the FMCG sector.
Thanks, Snehi, for that roundup. We have seen auto, we have seen IT, we have seen FMCG, but how can we forget cement? Cement companies have delivered strong double-digit volume growth in Q4 with improving realization and margin expansion. Management commentary is focused on capacity growth and cost control, though near-term demand looks slightly cautious. Ashesha is joining us. What to watch out for FY26 in cement sector?
Turned out to be a very strong set of numbers for cement sector. In fact, volume growth was reported very strong by all three major cement companies. Double-digit volume growth is what these cement companies reported. Remember, price hikes were undertaken in the quarter gone by, and even in the first quarter of FY26, many of these cement companies across regions in India have undertaken price hikes. So realizations are expected to be on the higher side in the first half of FY26 as well. Three key factors which played an important role in the strong set of numbers that the companies reported. One is cost reduction. Focus of companies on reducing costs and expanding their margins continues to remain a key focus area. Margin expansion. Most of them have reported strong margins in the quarter gone by, and capacity expansion continues to be a key focus area for all the companies in the cement sector, including UltraTech Cement and Ambuja and ACC. Let's talk about volume growth then. UltraTech reported a strong volume growth of 17% on a year-on-year basis in the fourth quarter. Ambuja at 13% and ACC at about 14%. So very strong volume growth reported by companies in the cement sector. Let's also talk about companies in particular. UltraTech Cement, higher realization and operating leverage aided numbers in the quarter gone by. Remember, double-digit volume growth is what they've guided for FY26. Although they say industry volume growth could be in the range of 7 to 8%, for UltraTech Cement, volume growth could be in double-digit. Although as far as near-term demand is concerned, they sounded a little cautious. Let's also talk about ACC and Ambuja over here as well. Very strong set of numbers by both these Adani Group companies. Ambuja Cement reported lower costs, higher realizations, which again aided numbers. They reiterated their cost reduction guidance, and they are aiming EBITDA per ton of 1500 rupees per ton by FY28 versus 1000 rupees per ton that the company had reported in the quarter gone by. Lastly, as far as ACC is concerned, again very strong volume growth, and their focus on expansion also continues to remain very strong. Volumes and realization beat estimates. So all in all, turned out to be a very strong set of quarter for cement companies. Their expansion plans continue to remain intact, and cost reduction and EBITDA margin expansion is something that we need to keep our eye out on.
All right, thank you, Ashesha, for getting us that roundup of the cement sector for the Q4 and the outlook going forward.